Good morning. This is Larry McMillan with the stock market update on Monday, December 19th. Well, as we head into the Christmas holiday and the New Year's holiday, the market is generally bullish during the period of time what we call the Santa Claus rally. That begins at the close of trading on Thursday. The Fed has had other ideas, though, and the market's been selling off pretty steadily since the CPI numbers were announced, or more appropriately, since the FOMC meeting last week. So there's a possibility we could sell down into that Thursday and then perhaps rally at the end of the year. The S&P has broken below 3,900, which is a negative development. And there's theoretically support at 3,800, but once that seasonal bullishness gets out of the way, we're probably going to test 3,700. On the upside, there is resistance at 4,100, which is where the last rally failed. The equity-only put-call ratios are on sell signals. They're very high on their charts, meaning that there's an oversold condition there, but they're still on sell signals. The same thing goes for breadth. It's on sell signals. It's been very negative recently. So breadth is oversold, but that does not mean buy. And new highs versus new lows continues to be on a sell signal. So all those things are internally negative right now. Not what you normally expect to see at this time of the year, but we did see a similar situation back in 2018. We seem to be following that model, maybe not as violently, but still following it. The VIX indicators are more positive. We have a VIX spike peak buy signal in place. I wrote an article about that in the Option Strategist newsletter last week, though, because it's an unusual buy signal, but it still is a buy signal. Well, also, the trend of VIX continues to be downward. VIX has not rallied much, even though the market sold off here. So that keeps the trend of VIX buy signal in place. Also, the construct of volatility derivatives is positive in that the term structures of the futures and the CBOE indices slope upwards. So all of that stuff doesn't really add up to a very positive picture, especially if you remove the volatility aspect of things. But we do, as I say, have this seasonal period coming up. And it's usually pretty strong. And it's also another clue. If the market doesn't rally over the last 5 trading days of this year and the first 2 trading days of next year, which is what Yale Hurst defined as the Santa Claus rally period, if it doesn't rally during that period, then that's an additional negative for the market. So there's full trading all this week. And so good luck with your trading and have a great holiday. We'll visit you again next week.